Connect with Singtel. My name is Gerald Wong, and I'm very pleased to be your moderator for tonight. This webinar is organized by SIAS and supported by the SGX Group. Well, I believe for many of us here, Singtel doesn't require much of an introduction. But when I was doing the research for tonight's webinar, I found that there were a few interesting points that I learned by looking through their investor slides. So it seems like there are now new drivers for growth for Singtel, and they've also embarked on a capital recycling strategy to be able to target more value for shareholders. So we'll get Mr. Arthur Lang, who is the CFO of Singtel, to be sharing more of these updates with us during today's session. And we will also have a Q&A session. We'll be happy to be taking your questions for Singtel. But before we go into the session, we want to be kicking off today's webinar with sharing on the Singapore market update by Mr. Tu Jin Chong from Mumu Singapore, where he will be able to share with us what are some of the recent key developments. So over to you, Jin Chong.
Hello, thank you, Gerald. So I'll first start by sharing my screen. I hope the screen is being shared for the PowerPoint slides.
Yes, we can see it.
Okay, that's great. Okay, then I will start. So hello and a very good evening, everyone. My name is Jun Chong, the equity dealer at Mumu Singapore. Really pleasure to be here today at SIAS Corporate Connect. And thank you, SIAS, for organizing this Corporate Connect session. And without further ado, let me begin with this market updates. So of course, 2024 has just started. So, okay, move a little bit. Forgive me as I'll be sharing a lot of this market updates for the year of 2023 for now. So over here, this is for 2020, the whole of 2023. We do see returns for different markets. Of course, the US stocks and equities did surprisingly well despite many calls of recession during the 2022, with the S&P 500 index rising over 24%, while the tech-heavy Nasdaq Composite rose over 43%. And over in East Asia, we did see that Korea and Japan's benchmark index, the Nikkei 225 and KOSPI, they rose 28% and 18% respectively. Japan has been an interesting market throughout 2023. And at the end of this month, actually, Lion Global and Nomura, they'll be launching a new ETF with this reference benchmark on the Tokyo Stock Price Index. So investors who are interested in Japan should find out more about this. So of course, while there have been gains, some markets did not perform as well. So we see that the Hang Seng Index fell over 13%, with the SSE Composite falling about 3.7%. The lackluster post-zero COVID recovery with the property crisis that we see did not really bode well with the Chinese markets. And 2024 will be an interesting year to see if there will be any rebound for the Chinese market. So of course, the Singapore STI closed off slightly in the red at 0.34%. And if I can go next. So of course, while the STI fell 0.34%, the total returns for STI was actually at 4.7%. This total returns, of course, included dividends and distributions, and the Singapore market is well known for its stability as well as the predictability of this dividend payouts or distribution payouts. Of course, STI, 40% of STI is made up of the trio of banks, DBS, OCBC, UOB, and other components of the STI includes the real estate investment trust, and of course, well-known blue chip companies such as Singapore Airlines and Singtel. So of course, interest rate was one of the biggest story in 2023, which impacted the share price of a lot of companies. But Keppel and Sembcorp actually contributed about 60% of STI total returns last year. So investors can go over to SGX Research and Education website to find out more on what these two companies have done and get a better understanding. So outflow-wise, 2023 was a very interesting year because we did see that retail traders are buying more while institutions are selling. So the net retail inflow for 2023 was at 2 billion, whereas the outflow for institutions was at $3.6 billion Singapore dollars. So SGX actually releases this a weekly fund flow tracker. So investors who are interested into this data can actually go down to the SGX website to see what institutions or retailers are buying or selling. And these figures, investors can actually look into the SGX websites to find out more. So next, little on the US market. I think this tree that I have here are probably the three buzzwords of the US market. I'll just go through briefly. So although one can argue that the Magnificent Seven, or you can change it with AI, depending on which one you prefer more. So AI or Magnificent Seven, either way, this top 7 companies propel the US index further, with companies like NVIDIA recording over 200% gain in their share price. So for those who are not too clear on the Magnificent Seven, so in no particular order, the 7 companies are Apple, Alphabet or Google, Microsoft, Amazon, Meta Platforms, Tesla, and NVIDIA. So the second thing is, in the early parts of 2023, we also saw the banking crisis that rocked the US markets, with banks such as the Silicon Valley banks collapsing. Although not really entirely in the US, we did see the Credit Suisse and UBS merger as well. And just to briefly close it off, and lastly, we have the US Federal Reserve and the interest rates. So like I said, 2023 was really a lot about interest rate. And coming 2024, the Federal Reserve and interest rate will still be on top of a lot of investors' mind because of the potential rate cuts that will come in 2024. So we look at some current and future economic events right now. So at the top of the list, we do have the Israel-Hamas conflict, followed by the Ukraine-Russia war. As we are kind of approaching the second year of the Ukraine-Russian war, we are seeing escalations increasing on both sides. We do see some similarities to what happened on the first year anniversary as well. And of course, the Israel-Hamas conflict that's ongoing has also resulted in the Red Sea crisis that we are seeing today. So of course, the Red Sea crisis, this disruption has increased the cost and of course time for cargo ship to deliver their goods across the typical Suez Canal route right now. These disruptions may actually potentially impact businesses and consumers, and this is an ongoing thing that investors should look out for. Another event that can potentially shake the markets will be the different presidential elections. So with nearly 40 territories going on election in 2024, the key elections that I guess a lot of Singapore investors should definitely look out for will be the elections in Taiwan, Indonesia, and the USA. The Taiwanese elections are actually happening this weekend, and this election will be widely watched by both the US and China. And it will be really interesting to see the election results and how the market will react to it. And then lastly, the potential rate cuts by the Federal Reserve. Next, okay, I talked a little bit about Chinese economy just now, and in the December release of this Caixin PMI, we see that it rose to 50.8, which was actually the fastest expansion in 7 months. So in a way, that this is some bright signs for the Chinese economy after many months of sluggish data. It will be interesting to find and see if further data can propel this Chinese economy further. And the next one will be for Singapore. For 2023, Singapore actually closing at a 1.2% growth for the entire year. And of course, this was within the lower range bound of 1 to 3% that the MTI has forecasted previously. And then lastly, for 2024, there will be 8 FOMC meetings by the Federal Reserve. And the last meeting, we did see that there were signs for 3 potential rate cuts. Of course, many Wall Street banks have forecasted their own prediction for these rate cuts, with some banks predicting as much as 6 rate cuts. So according to the CME Fed Watch tool, future traders are actually predicting a over 60% chance actually for the first rate cut to happen as early as the March FOMC meeting. So this investors can really look forward to see if this rate cut do actually happen as early as March itself. And then on Singapore economy side, I previously mentioned Singapore economy came in at 1.2% for 2023. And the MPI has also forecasted for the Singapore economy to be at a range of about 1 to 3% again. However, as mentioned by our Prime Minister, Mr. Lee Hsien Loong, on his annual New Year message, much of this forecast will really be dependent on external environment, which is why the previous current economic factors like the Red Sea crisis, the presidential elections, a lot of these rate cuts or potential rate cuts, be it 3, be it 4, 5, 6, all of these different external environment, external events, it's really dependent on how well the Singapore economy will do. So a lot of these future and current economic events will be important actually for investors to keep their eye on. Okay, and of course, I shared a couple of things. This will be my last slide as well. And to end it off, there are still many good reasons to continue investing in the Singapore market. So first and foremost, of course, we do have the strong Sing dollar. The Singapore dollar was one of the strongest currencies in 2023. I think many in the audience today could probably resonate with me because I know families or friends, a lot of them actually went to Japan recently, be it a few months ago or they're intending to go soon because of the strong Sing dollar. So many of these travelers, they are taking advantage of strong Sing dollar against Japanese yen. So that's one of the reasons of having a good strong Sing dollar. Next is, of course, stability in Singapore. I think really nothing more to say about this. Political, financial, and economically, Singapore is doing really well. This is one of the key advantage of investing in Singapore. Singapore is compared to many other countries doing really well. We are still open for business. Economy is doing okay, and all of this stability that Singapore has for investors bring us to the next point of income investors. So for investors who like income, they look into dividends or distributions when they are investing in the Singapore market. So be it for investors that are looking into the trio of banks or Singapore REITs as REITs, a lot of this Singapore market has been traditionally where a lot of these investors get their income from. And many of these companies in Singapore has been consistently paying dividends to their investors, with some companies giving out dividends even in decades. One such company will be Singtel as well. And of course, last but not least, the Singapore market comes with diverse investment opportunities with many different financial instruments for investors to invest in. So we have stocks, ETF, DLCs, warrants, futures. And of course, at the same time, with all these different markets available for investors to choose from, they can diversify. So let's say you're looking at China, you can actually, for futures investors, you can look into China A50 contracts, or for those who want Japanese exposure, as I was mentioning in the start, at the end of the month, there will be a new Japanese ETF launched by Nomura and Lion Globals. So investors can actually look into all these different diverse investment opportunity. And with that, thank you all for your time, and let me pass it back over to Gerald.
Thanks so much, Chin Chung, for the market update.
Thank you.
I think one point that you rightly mentioned is that a lot of investors in the Singapore market are looking at earning a good dividend income. And I think Singtel often comes up on the radar for investors who are looking to be able to earn such a dividend income. So I think without further ado, I will invite Mr. Arthur Lang, who will share with us some of the recent developments of the company and help us to understand what are some of the potential prospects that we can look forward to in the coming year. Arthur, over to you.
Thank you very much, Gerald. Just wanted to confirm that you all can hear me well.
Yes, we can hear you loud and clear.
Okay, thank you, Gerald. Hi, everyone. Thank you for taking the time to spend with us this past hour. I hope all of you had a nice dinner and and can listen to us. I hope your stomachs are not rumbling too much for those. So really appreciate the time that you are spending with Singtel to understand the story. I must also thank SIAS as well as the SGX for supporting this event. I think it is very important. You will, all of you are, I am very sure many of you are loyal investors of Singtel, and I really appreciate it. We will you have my word that this year we're going to spend a lot more time with retail investors to explain our story and to show you all where we are going. As I think Gerald mentioned, our dividends have been growing in the last 2 or 3 years, but unfortunately our stock price is not performing well, and I will talk about it more. And I'll be very honest with you, I am a shareholder of Singtel too. I will, and we have a very clear plan to see what we can do to improve on our stock price. So with that, maybe I'll give a quick introduction of myself. I am the Group CFO of Singtel. I also look after the international businesses for Singtel. I took over the CFO role about two and a half years ago. Prior to that, I was the CEO of the international group at Singtel, and before that, I was actually the Group CFO of CapitaLand. So I'm very happy to be talking to you all at this event. So let me start in the first slide. If I can ask the person to flash up the slide. Thank you, Alicia. Okay, good. So I think all of you, I'm sure many of you are actually very long-term investors of Singtel. You will realize that about two and a half years ago, Singtel went through a big change. We had a new chairman, we had a new CEO, we had a new CFO, all within a period of 6 months. Right. And I think what we did was we came up with what we call a strategic reset, right? Because I think at that point in time, the company was going through a lot of industry challenges. Our previous leadership, I think, did very well in bringing Singtel to where we are, but we had to do things differently because the environment has changed. So what we have done is we have actually organized the group to make Singtel a lot more simpler, right? And if you look at this, today, these are all our businesses, the main businesses. We still have some smallish businesses, but these are the businesses that will really drive the growth and drive dividends. Let's start with Singapore. So Singtel Singapore today, we are the largest mobile and fixed broadband player in Singapore. We are clearly the leader in 5G. We take care of enterprise customer, we take care of consumer. So that's our Singapore business. Optus is our Australian business where we own also 100%. Optus today is a number 2 player. Again, it's a leading company in 5G services, but it is a number 2 company in a market where there are 3 players. NCS, I think, is a well-known name. It's been around for decades. It is an IT services arm. In fact, it is the largest IT services player in ASEAN. And with the trend in digitalization that we are seeing today, and even with the geopolitics that we are seeing in Singapore, between US and China, Southeast Asia and ASEAN are really benefiting from it. And we are seeing NCS benefiting from that. The other main business arm is our digital infraco. This is our digital infrastructure business. Most of it is in this business called RDC, which is Regional Data Center. Many of you may not know, but Singtel is probably one of the largest, number 1 or number 2 data center owners and operators in Singapore. Okay, and we are growing. Actually, we are doubling capacity in the next 3 years. And I will talk later about why data centers are very important as a business. There are other businesses within digital infrastructure company like Paragon and Satellites. Paragon is really we have created, this is something that is produced by Singtel, okay, patented. It's really, think of it as an operating system for 5G services for telcos. So this is really a layer where we can coordinate all the 5G types of services across broadband, across mobile. And we are very excited about this business as we are growing it. And then within digital infrastructure, we also own satellites. So I think you all can guess this is a very sensitive business. I will not spend too much time in that, but I would simply say that this is a business that we are involved in, and not many players in Singapore can actually do this. Finally, which is the 5th leg that you see, is what we call our international regional associates. This is basically, I think, for people who follow us for a long time, you will know that Singtel is actually the largest or the second largest owner of Airtel, Telkomsel, Globe, AIS, and InTouch. All these telcos here are either the number 1 or the number 2 player in their respective countries. In Airtel, it is the number 2 player in India. Telkomsel, it is the #1 player in mobile and in fixed broadband in Indonesia. AIS in Thailand, we're the #1 player in fixed broadband and #2 player, very close #2 player in mobile in Thailand. And Globe, we're the #1 mobile player in the Philippines. So these are not small companies. In fact, they contribute more than 3/4 of our underlying net profit. This is how much our international business has grown in the past few years. We've held these companies for about 20 plus years, and you will see we're actually gaining a lot of cash flows and a lot of profits coming from these international businesses. This is something where Singtel, I would say across all the Singapore companies, we are very unique because we're not only the leader in Singapore, we're actually the leaders in many Southeast Asian or South Asian countries. In the next slide, and this scale is very important because now if you look forward in the next few years, there are a lot of trends that are favoring Singtel in the next few years, right? It's not just the near term, but in the near to medium term. I think the first bit, as you see, is the positive trends in telco. I think many of you, especially in the last 2 months, have looked at Changi Airport and said, my goodness, so many people traveling, right? Going on holiday and all that. Singtel is one of the largest, actually it is the largest, we have the largest market share in roaming. So you can expect that, the recovery in roaming because people are starting to travel. It's not just the consumer business holiday travel, but it is also the business travel, right? That we are seeing people are starting to travel this past year again, and we are quite optimistic about our roaming business. Of course, tourists coming into Singapore, also we are capturing that market share, right? When tourists come in, they will use Singtel and they will roam on the Singtel network. We will also collect fees there. I think the other point to highlight is 5G adoption, right? 5G is a new technology that we are leading in Singapore. In fact, Singapore is a leader globally in terms of 5G. And then within Singapore, Singtel is really, I would say, the largest player here. Now, for you and me, right, whether I watch video lah, whether I do WhatsApp, 5G or 4G, it's not a very big difference, okay, in terms of speed, okay? But once you go into companies, right, when you do factory lah, automated manufacturing, when you have robotics, when you have all this IoT and all this function, they will really need 5G. And we have actually started a lot of partnership with companies in Singapore to really use our 5G platform. One example I can give you is you can see on the road today a lot of these Hyundai Ioniq 5 cars. They are electric vehicles. Many of them today are produced in Singapore. And in Singapore, it's produced in a automated factory, meaning very few human workers. It's really all robotics. And these robotics need very fast speeds and connectivity, and they are using the 5G network on Singtel. You can refer to Google or the newspapers to see more of this. But this is something I think we're very excited. It is something that we will see the growth in the next few years. Not immediate because these new technologies take time, but we are confident in that. I think the third thing is also we have spent time really rationalizing our costs. We have tried to simplify the businesses. And now over the next 2-3 years, we are looking at a $500 million savings. This savings is cash savings, which means that if we actually manage to save the cost, we have the even greater ability to pay out a dividend or higher dividend because these are all cash. Right? And I think the other point is also we are using AI. This is not just about cost cutting and cutting people and all that. Unlike, I think you read a lot of companies have been quite, I would say, they cut headcount in the beginning of the year and all that, which is not quite the right thing to do, right? I think what we do is, of course, we will have to right-size the organization, but we want people to learn new skills so that we can reallocate them to other jobs. At the same time, we're using AI, artificial intelligence, to drive efficiencies. So that's how we're looking to rationalize costs. I think the second pillar, right, is what will benefit our data center and our IT services NCS company. After COVID, you see actually there's a big increase in a lot of companies and government agencies wanting to digitalize. They want to adopt the AI, AI services and all that. And you know what? They come to NCS. right? They will come to NCS to help them actually do this. So NCS is owned by us, right? And I can give you some examples. You will see all the new technologies that are happening using by the police force. If you go to the polyclinic and the hospitals, everything is IT based and all that. And all that NCS has been quite involved. Even the library, the National Library now. If people who go to the library, I should go there more often. I don't have time to read books now, but if I do go to the library, a lot of the boring, the automated boring systems and all that is actually NCS had a role to play there, right? So you will see that in everyday life, you will actually see NCS doing a job. Even Changi Airport, some of the facial recognition when you use your passport is actually being done by NCS, right? I think the other point is data centers. This is something that in the next few years, especially with artificial intelligence, you will see tremendous opportunity here. Today, our data center business is almost 100% full. It's a bit like a shopping mall for data, right? The tenants are all the companies like Google, Microsoft, to the banks, to the government agencies. We are basically providing the shopping mall for data center to store data as well as to process data. And someone like a Singtel, given our parentage, given our pedigree, we are trusted in looking after the data, may being responsible for the data. So I do think this is something that we will see a lot of growth. We're not only expanding in Singapore, as I mentioned, we're going to double capacity in Singapore in the next few years, but we are also quite aggressively going out into the region, leveraging on our partnerships with our business partners. And then talking about the region, if you look on the right, I am very excited to say, just now I keep saying, our associates are number 1 or number 2 in mobile, but we are very quickly also becoming number 1 or number 2 in fixed broadband. Fixed broadband is the next big growth opportunity. For example, in Singapore, right? If I ask you, how many homes have Wi-Fi? It's easily 97, 98% of Singapore homes have Wi-Fi. Okay? In Indonesia, that number is only 17%, 17. And guess what? Singtel just acquired our associate Telkomsel today with some of the M&A that we did with IndiHomes. Today, Singtel is the owner of the largest mobile and the largest fixed broadband player in Indonesia. And that's a massive country, right? And imagine it's only 17% of the homes have Wi-Fi. So you don't even talk about Singapore 97, 98%, even 50%, 50%. We are the largest market share player there. We have a tremendous opportunity to grow, particularly in our fixed broadband Wi-Fi business, right? And I think the final point is, if you look in our industry, it's a very competitive industry. You look at Singapore today, I don't know, we've got how many players offering you very cheap or some even give you free data, right? Singtel also give you all some cheap data, but we also got a business and we want to create value for our shareholders. I know sometimes you all might say that we don't charge very good prices, but we will provide good quality, good coverage, good connectivity. But if you look outside Singapore, many of the markets, the number of players have actually shrunk, right, through mergers and acquisitions. So if you look today, India, Thailand, Indonesia, we have actually seen the number of players becoming smaller through acquisitions and mergers. Fewer number of players means that the likelihood that the market will stabilize and we don't have price cuts and price wars and all that, which of course helps the market leader, right? Which in many of the countries, we own the market leader. So I would say these are some of the trends that we are seeing that will favor Singtel in the coming years. Now, in the next slide, if I may ask, so we're beginning to see, and in light of that, right, about 2.5 years ago, when I took over as CFO, we looked at the business and we knew at that time that the economy and interest rates were not going in the right direction, right? People were starting to say, especially we're coming out of COVID, doing very well. But then you got, I think just now the Jin Chong, the person from Mumu, was saying, then you had like war, we had, interest rates going up and all that. And we say it's time to strengthen our balance sheet. Because I think at the end of the day, through a crisis, only the companies that have solid balance sheet will survive, and will not only survive, but we will do well. So what we did was we went to illuminate, what we call illuminate value of our assets. Because Singtel today, we trade at, a telco multiple, 8-9 times EBITDA multiple. But many things that we own, actually in our balance sheet and our books today, is carried at very low value. But when we sell, it was sold at a very high value. A classic example is, our Optus Towers called ATN. Okay, we sold it at 39 times EBITDA multiple. Okay, this is what I mean by creating and illuminating value of our towers business. I think we raised about how much? $2 billion. Airtel was our India stake. Just by selling 3.3%, we raised about $2 billion. Then the last one was last year, right? A deal where we brought a private equity player, KKR, to come in. We sold them 20% of our data center business. We still control, we still manage the business, but we leverage on KKR's balance sheet, capital, and international network. But what's important is we sold the data center business at a 32 times EBITDA multiple, minority stake. Okay, valuing the data center business alone at $5.5 billion. So this is all you see on the left-hand side. We did a lot of different things, right? But we raised a total of $5 billion in the last 2 years. We've got another $2 billion in pink that you see is going to come in the next few months. And then I've got plans to raise another $4 billion or unlock another $4 billion in the coming, I would say this coming year, maybe 18 months, right? And all this is, what do we do with all this cash, right? Okay, before I answer that question, I also should say we have also sold loss-making businesses, because when we looked at it, it's no more. We wipe it clean. All the loss-making businesses, Amobila, Trustwave, we have sold them, everything. So going forward, all these businesses that used to make us lose money are no more there, right? Which means that, our profits hopefully will be higher because you don't have those losses there. So coming back to the cash, I think the point we need to make is, what did we do with all that cash? So the first thing we did was to reinvest into growth areas. So we went into NCS. NCS bought our Australian business. We are using that cash to also build out our 5G network in various countries. We also use that cash to really strengthen our cybersecurity capabilities and platforms. So one part of that cash is used for that. The second bit of cash is in the next slide. We saw interest rates going up. We decided to pay down debt. So you will see that on the left-hand side, just during that 2+ years, we paid down $3 billion of debt. Okay, saving us a lot of interest expense, because the interest expense now, tripled or quadrupled. I think all of you can see interest rates just go up, right? And it's not just go up by 20%, 30%. They went up by 300, 400%. But if you look at our interest, we don't have our interest expense here. Okay, if you look at our interest expense, we actually dropped our interest expense during this period. Maybe, Adrian, when you get the number, you can say it. How much interest did we drop? In a period where our interest rates went up, our interest costs actually dropped. If you look at many Singapore companies, I don't think many can say that in the last 2 years, interest expense actually dropped. Now, this balance sheet today, we have a strong balance sheet that can withstand all the volatility in the market. And we can use this balance sheet to actually continue to grow the business. But one of the most important things we cannot forget is our shareholders. How do we use this cash? All this cash that we generated, what are we going to do about it? In the next slide, you have seen that we have actually grown dividends to our shareholders. In the next slide. So you will see fiscal year 21, that was the first year of the strategic reset. Fiscal year 22 was the first year of the strategic reset. First year alone, we increased dividends. 7.5 cents went up to 9.3 cents. From there, we decided we recycle a lot of capital. We say, you know what? Not only do we increase our core dividend, we also paid a 5 cents special dividend, 14.9 cents. Now, this year, We only, because this financial year in November or October, we announced an interim dividend. The interim dividend used to be 4.6 cents. We increased it to 5.2 cents. Now, of course, it depends how we're going to end the year, but I am confident that, or at least it is in our plan to actually continue to grow dividends in a very sustainable way. And we plan to do that, right? And I think to what Gerald said, to what Jin Yong said earlier, dividends are very important to all of you, also to me. I got children that are going to school. I need to use that money to fund their university education, right? All this is very important. And this is something that I would say the management is committed to growing dividend in a sustainable way. And when I say sustainable, is we will not borrow to pay dividends, because that's not sustainable. The dividends will be paid out of the operation. So if we improve profitability, improve cash flows from the business, that one we can pay the dividend. If we have recycled the capital, just now I told you we recycled 7 billion, got another 4 billion to go, right? We can use that cash to pay out some form of a dividend, right? And you will see on the right, we actually announced an increase. We revised our dividend policy from 60 to 80% of our underlying profits to 70 to 90 going forward. Because this is something we believe, we are confident, given the strong balance sheet that we have, given the business drivers that we're seeing, the trends, we're confident of paying a higher payout to our shareholders. So all I can say is I can't give you guidance or anything like that because our financial year has not ended, but it is something we are committed growing dividend. Now, the final slide I will talk about in the next slide is to wrap it up, and then I definitely want to hear question and answer question, right? What are we doing to create shareholder value? Now, when I say shareholder value is stock price and dividends. Okay, I talk a lot about dividends. But in the stock price, I think we need to continue to simplify the business. We have done a lot of that. You know, just now I show you, right? We are very clear where our business drivers are. In Singapore, we actually merged the enterprise and the consumer business together to have one Singtel in Singapore. We are going to cut costs, right, by about 500 million. So this is part of the simplification of the business. We have taken out all the other businesses that are very confusing, Amobi, Trustwave. You know, these two businesses combined used to lose us $100 million. So imagine if these two businesses are no longer there, effectively we make back the 100 million because we don't lose them, right, our profits. So that's the first leg. Actually, the second one, we sold the loss-making businesses. The third business is what we call the return on invested capital. Today, I remember at the beginning of the strategic reset, our ROIC was about 6.1%. The last time we announced our ROIC was, I think, about a few months ago. It was 8.3%. I am confident that in the medium term, meaning in the next 2 years, we will hit double digit. Okay, that means 10+%. And finally, we mentioned, and I stress again, we have made it we have shifted our dividend policy upwards. We have also paid a higher interim dividend. So that would suggest that there is a chance, okay, barring unforeseen circumstances. Let's say next month, you know, World War III breaks out, right? Then I think that one, tak jalan lah, right? I think cannot, right? So but if all goes well, if we execute well, I am confident that we can grow dividends in a very sustainable way, which would mean, as we've seen, you know, the dividends moving up over time. So this is something I would say is a good summary of what the Singtel management is committed to. Maybe now is a good time for me to hand it back to Gerald to, you know, ask questions, because I think many of you have questions and then I can answer the question.
Thanks so much, Arthur. We definitely learned from your sharing, and you're right that there are a lot of questions that have already come in.
Yes.
So I'll jump straight into something that you shared earlier around the different growth drivers for Singtel. I think one of the points that you touched on was about 5G. So how involved is Singtel in some of this growth within the 5G industry? And if I'm looking even further ahead to 6G, what are some of the opportunities there?
Okay, no, Gerald, thank you for the question. I think to maybe answer 6G first. 6G is nowhere near commercialization. Okay, 6G right now is really, you know, maybe focused on by universities and labs to test and experiment. At this stage, to commercialize it is probably still quite a few years away. So 6G right now, commercialization not quite ready yet. 5G, in fact, is something that is just starting. Okay, many countries are just starting to roll out 5G. Singapore was actually the first country in the world to roll out what we call standalone 5G. That means the true blue 5G. Then, Korea, China all came out with 5G. In fact, many parts of the US and Europe still don't have full 5G yet. So we are still very much moving ahead on that. Even our Southeast Asia region, Indonesia is just starting 5G. Thailand is almost probably about a year behind Singapore. India is probably a year behind Singapore as well. Philippines is probably 2 years or 18 months behind Singapore. So there's still, I think, a few more years for 5G to catch up. Now, the opportunities in 5G, I would say it's more in the enterprise space, right? It is, as I mentioned earlier, that Hyundai example, right? It is in automated factories where the speed is not only the speed that's important, it's the ability to split 5G, the network. Okay, I tried to explain like an engineer. My engineering colleagues all explained to me, but very cheap. So I tried to simplify it, right? It's basically taking 5G technology, right, in a factory. Let's say one part of the factory needs slower speeds, right? And another part of the factory needs very high speeds. Okay, then another part of the factory, certain type of equipment needs very precise, what we call latency, right? Meaning it must react very fast. You press the button, bam, and this is not talking about seconds, this is talking about milli or microseconds. So imagine like autonomous vehicle, right? If suddenly you see a child walk past the road, the autonomous vehicle need to sense it, immediately jam the brakes, right? It cannot even be slow by 1 second or 2 seconds. If not, the poor boy will get hit, right? So this 5G is able to do all these things. We can slice the network. So if this part of the factory needs slower speed, it's okay. 5G, we slice that, we give it to that equipment. Another part needs very low latency. It's okay. We slice it, we give it that. So this is how we can, that's the wonderful thing about 5G, which 4G cannot have. So so in a lot of the business use cases is in automated manufacturing, as I said, robotics. In fact, in NUH today, NUH is using Singtel 5G to do what they call automated pharmacy. So the doctor or the pharmacist will say, okay, the patient, there's a request, say, this patient needs this medicine or whatever, it gets submitted in. The robot, using 5G technology will be able to pick the medicine. Of course, there is a pharmacist to double check, making sure the medicine is correct, and then it gets dispenses to the patient, right? I think the other area that's very exciting is the area of holograms and the metaverse type. But that one, I think, still quite early stage. Now, the other area where 5G technology can be used is in the area of artificial intelligence, where the processing, the language models, the learning by the artificial intelligence model, I think if you do it really fast, the processing using 5G, I think that's very, very powerful. So these are some of the 5G use cases. I think the takeaway is that it is still early stage. Now, early stage means that the operators need to do work faster to roll it out, but it also means that our business customers need to be comfortable with that. So you think about it, right? Our automated factory. If an automated factory uses 5G technology to have robots, what happens to the human workers? Right? So these companies need to think very carefully. These human workers will be retrained, right? To retrain, to upgrade them skills. All these take time. So that's why the whole introduction of 5G to businesses will take time. But I think it is important to spend the time to make people comfortable with new technologies. So that's something that, of course, Singtel, we are also working it closely. Yeah.
I think another exciting area of growth is in cybersecurity.
Yes.
One of the areas that you mentioned earlier. How do you envisage your growth within the cybersecurity space? Will that come through from organic drivers, or you're looking at potential acquisitions to develop your capabilities here?
Okay, so a few years ago, we, as we had this business Trustwave. It was loss making. right? But what we did was we took the Asian business of Trustwave. Trustwave was a cybersecurity company. We took it out of Trustwave, the Asia business. We combined it with our existing cyber business under NCS. So today, actually, the old Trustwave Singapore and Asia is under NCS today. So we are actually providing cyber services, across a lot of our business and government clients, right? So I think that's the opportunity. I don't think we will make big acquisitions in this space, but we will grow because we already have capabilities. We might make small acquisitions to create, what I say, to build new muscle, right? Because the cyber business is always ever changing, new needs are needed. So maybe sometimes we may want to say, hey, this is a 50 million company. Maybe we should think about buying this to get capabilities. So we are open to that, yes. But cyber is definitely an opportunity that is very real. It is also very scary. I think all of you have heard all the horror stories about scams and all that. So it is not just building the capabilities at Singtel for cyber services, but it is also important to make sure we educate our customers, support our customers, and always, having that awareness of scams and cyber attacks and everything, right? That we need to protect ourselves because, the good thing about technology is all the wonderful things we can enjoy, but it's also a bad thing about technology because a lot of bad people out there can use technology to attack us. Yeah.
So the other part about technology, I guess for 2023 was about AI. And you mentioned about the growth in data centers and how you're very strong in data centers.
Yes.
Is there any potential to spin off some of your data centers as a data center REIT?
Oh, definitely. There is definitely potential, but we feel that we have a lot of upside to go. So we've got this 60 megawatt capacity building in Tuas. Okay, it will, and 60 megawatt, just to let you know, is probably one of the largest facility in Singapore. Okay, and it actually is not just the size of the capacity, but it will be the greenest data center in Singapore, if not the region. Okay, so we want this to be built first. Then I think we can consider a potential REIT IPO or anything like that to really, get a very good valuation. But I can really share, with KKR coming in, they value us at $5.5 billion. Okay, and what happened is the money that they put into us, we are able to grow and expand over the next 2-3 years without raising any more money. So we are fully funded to grow. Unlike a lot of other data center companies, they have to raise, debt lah, raise equity lah, raise perp lah to grow, right? But today we are fully funded and we are ready to grow, right? So yes, I think that to answer that question very quickly, we are definitely open to a REIT IPO, but that's something probably not in the near term because we want to grow, we want the Tuas to develop the cash flows, but at the right time, we will consider that.
I think the other risk that some investors might be taking off is the increase in carbon tax and how that will affect your data center business. So maybe you can share with us how will that potentially affect the cost of running data centers?
Okay, the carbon tax, you're right, Gerald. It is something that's going to affect the industry and all Singapore companies. That's why I think on day one, we try to minimize that by being green. So I talked about building green data centers to really minimize the carbon footprint that we have. I think we will. This is something that we're very committed. I think for shareholders who have followed Singtel, I think we are one of the leaders in sustainability, not just our data center business, but as a whole. We do take this very seriously. And in fact, I think we are ranked one of the top sustainability companies in Singapore and in Southeast Asia.
Okay, so we have gone through some of the growth drivers. The other key initiative that you spoke about was capital recycling. So there's this question by Raymond asking, what are some of the other potential assets that you can be looking to divest? And how do we think about in terms of your cash flow going forward?
Okay, thank you for that question. I think the best way, is I will share with you all the potential assets, but I will not share what exactly is the next asset. Okay, and the reason is this: Imagine if I tell you all today this asset is for sale. Wow, then everybody will give me a lowball price for it, right? I want to keep the market guessing. And you say, okay, you don't give me a good price for this, I don't sell, right? And I'm not pressurized. So you keep the market guessing and you surprise the market with a good valuation, like data centers. Nobody expected us to sell, but we may sell 20% and we got a record-breaking valuation. But I can share with you, I think it was Raymond who asked the question, if you look today, we have about $25-30 billion worth of listed companies, whether it's Airtel, no, actually more than $35 billion. Airtel, AIS, Globe, these are all listed companies. You go to Google, Yahoo Finance, you can see how much they are worth. Okay, Bharti Airtel, we own 30% in our India associate. That 30% today, I think is worth about $27 billion. We don't need to sell the full 30%. Just selling 2-3% is at least $1.5-2 billion away. Right? We sold 3% last time, 2 years ago. We raised $2.4 billion. If we were to do 3% today, that amount actually goes to about $2.7-2.8 billion because the price has gone up. Right? So we will do similar things like this time. I won't pick, it doesn't mean Airtel is next. It could be other companies. But this is something we are doing not because we don't believe in the business. We are long-term shareholders in India, in Thailand, in Philippines, in Indonesia. No company in Singapore can say they are number one in all these markets. Nobody in any business, right? But we are, so we will be committed to that. But it doesn't stop us from selling a bit, right? To monetize a bit, share it with our shareholders. We also have more fiber in Singapore, right? That we could potentially monetize. We have the stakes in our various companies like NCS, like Optus, that we could monetize if we want to, like what we did with the data center business. We have NLT, we have and a few others, right? So these are the things that we could potentially explore. I think the most important thing is we want to make sure we get a good valuation, and then we take the money, either we return it to the shareholders or we reinvest into higher return businesses.
Okay, quite a number of questions around competitive risk. So question from Lynn, asking, how do you see the competitive landscape for your mobile business? And what is it that would make Singtel having a unique position to be able to grow its earnings despite all of these competitive trends?
Okay, thank you, Lynn, for that question. I think if you look at our competitive landscape, right, let's start with Singapore. Singapore is a very competitive market, right? You got StarHub, M1, TPG, and then a lot of other players, circles and all that, right? And I would say it's very competitive. How do we respond in a competitive market? I think fundamentally, we need to focus on what we deliver for our customers. The value that we deliver. We must make sure that we are always connected. The speeds are as fast as we can try to be, right? When you all go traveling and use Singtel roaming, you just go to our app, you just press a button, you flick it, roaming immediately starts. And when you roam in Japan or in Thailand, in Bangkok or wherever, you don't have slow speeds. Many of our competitors, wow, almost free roaming or whatever, right? And then you get slow speed, then you get very irritated because you cannot watch your Instagram, you cannot go Google Map and all that, right? Because they slow it down, which is true. I think some of you may have experience. I think at Singtel, we don't do that. We differentiate ourselves by providing what is right for our customer. And that is something I think we will continue to be that and provide that, right? We will also be responsible, try our very best to help our customers to prevent all these scams. So you will hear the government announce a lot of anti-scam anti-scam efforts and all that for our Singaporeans. We want to help that. In fact, we've been working with the government to try and lead some of the thought and ideas there. Now, if you look overseas, right, India, Indonesia, Thailand, you will see, and I would say to some extent Australia as well, you will see that the number of players has actually gone smaller. And as a result of that, prices are actually moving up. So you will see that the stock price and the profits are actually moving up. This is what I call market repair, because nobody is killing everyone and there is stability in the market. Now, the price didn't move like immediately go up, but it is definitely more stable, right? So that's a positive for Singtel because we own, stakes in all these companies. Yeah.
So since you mentioned regional businesses, I think this is a question that some investors have. Given the recent incident in Australia,
Yes.
do you intend to be able to restore consumer confidence? And will we see any litigation risk coming through from this?
Okay, I think in Australia, you're right. We went through a very difficult time a few months ago with the network outage. I would say it's something that we really regret, and we are definitely holding certain people accountable for that outage. In terms of customers, the first and foremost focus is on our Optus customers to regain the trust, and I think most importantly to make sure everyone is not significantly affected. I would say we haven't announced our results yet, but I would say so far it's almost 2 months. Things are coming back to normal, and we are of course doing our very best to serve the customers there to bring things back to normal. But we are moving in the right direction. We're definitely not out of the woods yet. We definitely still have a lot of things that we need to do, but I think we are moving in the right direction. Now, in terms of litigation risk and all that, I mean, the reality is, I think there is, Senate inquiries that are ongoing, government inquiries. I think right now there's no indication that there will be, litigation or big fines, but we will, announce that whenever there is something. But at this point in time, there's no reason to expect that at this time.
The other risk that has been talked about is regulatory risk, especially since you mentioned that you are the leader in some of these key markets. How do you think about regulatory risk, especially when it comes to your market share in some of these key regional markets?
Okay, good question. I think the market share that we have in a lot of these markets is, in some places we're number one, in other places we're number two, but it doesn't. It is not to the extent that we exert pricing power, right? Because if we are irresponsible and we increase price too much, guess what? Customers will all leave, right? So the way that we play this is, yes, we are number one player. We need to make sure that we have the best network, the most connected network, we have the safest network, and we are able to customize the offerings to benefit the customers. Whether you are a teenager, a student, a teacher, a worker, or a business owner, right? We need to make sure we have the offerings that cater to that. So by differentiating, this is where we can continue our market leadership. It is not through pricing.
The other risk, I think that is something that a lot of investors are also looking at, would be the risk from cybercrime. How do you see the threat from a cyber attack? And also, I guess, linked to what you shared earlier about like being involved in protecting consumers against scams, what kind of responsibilities does Singtel bear if someone is scammed due to a text message with malicious links?
Okay, it's hard to be too specific, Gerald, because it really depends on the type of scams, and all that. But I would say that this cyber awareness and the scam risk has gotten much more important for everyone. Whether you are a customer, a consumer, whether you are a business, whether you're a bank, whether you're a telco, right? So the safety of our customers, the cyber safety of our customers is definitely the top priority. So we have stepped up measures to protect our customers from cyber crimes. So one of the examples is, I think a few months ago, there was this shared responsibility framework that the government announced where the banks are involved, the telcos are involved. So we were proactive. We mitigated the risk of SMS phishing scams. So we actually led the market, right, in terms of connecting or allowing our customers to connect only to approved aggregators of SMSs, right? So not just any SMS that goes through, right? And for any other SMS that are not authorized aggregator, we will block the SMSs, right? And on top of that, we implement an anti-scam filter on all the SMS to really block SMS with any known phishing links. So this is what we are doing. At the same time, we are consistently reminding our customers, if you get strange, SMSs, please don't click on the URL links. That's very, very important. Okay, and to give you a sense, every month, okay, we block our customers. We block 30 million scam calls and 20 million scam SMSs, and we continue to fight this. But I can tell you, the non-stop, the scams keep coming in. I think we all know this, right? No matter how much we block, there will be some to go through. So we need to defend it through multiple layers, right? We need to defend it in the front line, but also our customers. We need to keep reminding our customers, please protect yourselves, because you know what? Things will, right? Scams, there's so many different ways to scam. So, but we'll do our best, right? Because we really want to protect our customers.
Okay, I think what you shared earlier about capital recycling has made some of these investors quite excited. So they have thought of different ways that you can actually raise money. So this question by Zhilia asking, any plans for NCS IPO?
Yes, that is definitely one of the options as well to answer that question. Again, it's all about the right timing and the right valuation. If you see NCS, if you follow the what do you call that, the trend of of NCS, the first 6 months of this financial year, NCS did very well because 2 years back they were in investment mode, so the financials were a bit not shaky, but a bit didn't grow as much because we were in investing mode. But last 6 months, it actually jumped quite substantially, and we see a good trend going forward. So if this trend continues, if the market conditions, because IPO market now it's still quite jialat, right? It's but let's wait, right? If the market conditions are good, yes, we will explore that quite seriously.
So talking about the reinvestment plans, I think one of the areas that have been talked about previously was redevelopment of Com Center,
yes,
which was supposed to take place this year in 2024. Any updates that you can share in terms of the redevelopment plans for Com Center?
Okay, it is happening. So if I look at Com Center, which as you know is near Somerset MRT, right, the iconic building, I think about 70 or 80% of the offices have moved out already. The only people who are still there is myself, right, and my CEO and a few other people. Okay, we are the last few because we have year-end results coming. We want to be in the office. We don't want to move and then got all the moving issues and all that. So we finish the year-end first, which is end of March, and in April we will move. Okay, then I think in the third quarter of this year, that wonderful building that you see in Somerset will be torn down. So for shareholders, you are more than welcome to come to our lobby area. There's a public area. Take photo of the building before it gets torn down. Okay, but of course, before it gets torn down, we will probably get the press to let people know, because I think sometimes you all may want to take a photo because that building has been around for 50 plus years already, right? Older than me. So I think people will want to have some memories, But yes, the development is ongoing. No delays at all.
So we move from talking about something that is more than 50 years old to something that is very young, which is
Okay.
GXS.
GXS.
Yes. Any updates on how the business is doing, amount of deposits that you have taken in so far? Do you need to be injecting more capital into GXS?
Okay. The GXS business, which is our digital bank joint venture with Grab. So Singtel owns 40%, Grab owns 60%. The Singapore GXS bank is doing well. Then the question is, hey, how come I don't see a lot of advertisements? Because I cannot mention names, but the other investment bank, the other digital bank, which has a blue logo and white words, right, is doing so much advertising. Okay, we decided there was no need to advertise so much because advertisements, as you know, cost money. We simply rely on our Grab customers, the Grab drivers, the Grab food people, the Singtel mobile customers, the Singtel broadband customers, both individuals and businesses. And I can tell you, between Singtel customer and Grab customer, we probably cover every adult Singaporean. Okay, and we use that to advertise, and we get customers through that, which means that the cost of acquiring customer is much lower. Right? We can't grow like that, right? Although every stage we actually can grow, but at every stage the MAS will monitor us. We need to get approvals to graduate ourselves to the next stage. But I can share with you the deposits are very strong. And we are starting to lend out money, but we are not lending out anyhow lend, right? We want to lend in a very sustainable way because we want to make sure when we lend, we can collect the interest and we can collect the principal back as well. Okay, so I would say the Singapore business is doing well, right? We don't make a big hoo-ha about it because there's no need to. We want to save money, and the MAS wants to grow us a bit more slowly in a measured way. But I can tell you in Malaysia, we just launched end of November last year. That has grown amazingly well. Okay, we have already a few $100 million of deposits, which we didn't even need to actively advertise. And the acquisition of the customers is relatively straightforward and very simple because it's all in the app. So for people who want to open, Malaysians, you open, it's very seamless like in Singapore. And in Indonesia, which is a much larger market, in a few weeks' time, you will see us launching that in Indonesia. The name of the digital bank in Indonesia is called Superbank, SUPERBANK. Okay, and that's very exciting because in addition to Grab and Singtel, we have our Indonesian partner MTech, and we also have the Korean digital bank called Kakao. For people who know, Kakao is actually the most profitable digital bank in the world. And we are a very strong partner with them, and we learn a lot from them. So I would say, Gerald, this is correct. This is new, right? This is a new business. We are quite confident in growing it. And we do see this turning around, breaking even probably in about 2 years' time.
Okay, so we are now past 8, but there are 2 key questions that a lot of investors have.
Sure.
So the first one is around your share price.
Yes.
So I think some investors have observed that despite all the growth initiatives that we talked about, capital recycling, the share price is still fairly depressed compared to where it was in the past.
Correct.
So maybe you can share your thoughts around why maybe that is the case.
Okay, I will.
Can we as investors actually look out for to be able to have the share price coming back?
Okay, thank you for that question. I think this is the elephant in the room, right? I like many of you here on this call, I also get very sad because I mentioned earlier I'm a shareholder as well, and I want the share price to do well. In the last 2.5 years, I can tell you, I can assure you, and I can confidently say, and I'm not saying this, I'm saying it out of humility, I think the management team has done everything, in the right things, right, to really create value for the shareholders. Unfortunately, the price is not reflecting. The dividends are reflecting. So the dividends have been growing. So what we need to do now is what causes the price to be like flat, right, up and down, up and down. So I think one is, unfortunately, we are in the telco industry. The telco business today is, I would say flat, if I can use the word. Okay, that's the mobile business. So we want to focus on the fixed broadband business around the region. I talked about Indonesia, Thailand, India. There's fascinating growth there in the Wi-Fi fixed broadband business. Again, Indonesia, only 17% of households have Wi-Fi. In Singapore, it's 98%. Okay, so there's a lot more growth. So that's one area. The second area is in data centers and IT services. And I think the third area is continue to grow dividends. Because I think if investors are convinced that we can grow dividends in a sustainable way, it will be reflected in our stock price. And finally, I think there were some questions about whether we would consider a buyback. Management is of the view that our stock price is undervalued. So will we consider a buyback? I think I cannot give guidance or anything like that. But all I can say is that we do believe it's undervalued. And at the right time, at the right price, and if we have the resources, we will consider a buyback. But at this point in time, look, we have to consider all the various options. But I think rest assured that we are very focused on really making sure the shareholders get value, not just from dividends, but also from stock price appreciation.
So that brings us to the last question of this evening. We started by talking about dividends for income investors, and that was one of the key pillars that you mentioned as well. I think a lot of your shareholders remember that you used to pay a 17.5 cents dividend. So the question is, how do we think about the dividend going forward? and what needs to happen for it to go back to this 17.5 cents dividend?
Okay, I don't want to use that 17.5 as the benchmark, but I want to see year on year how we grow. Okay, so last year we paid out, I think, core dividend about 10 cents, and then we add on the 5 cent special is about 15 cents, 14.9, right? I think this year, again, you've seen that we have grown our interim dividend by about 13%. We will continue to grow that, right? And then, yes, if we continue to grow this, it's a matter of time we will reach 17.5, and we may even exceed 17.5. Again, I want to stress with you, look at the different businesses that we are in and the amount of value that we can bring. And this value is real cash value. It's not just paper value, right? So we are very committed to growing dividends in a sustainable way.
Okay, so I think we are all very pleased to hear that as a final comment by Arthur tonight. Thanks so much for your sharing in terms of some of the key updates. I think we learned a lot about what are some of your key initiatives and what we intend to be doing to be able to improve the share price performance.
Yes.
So thanks so
thank
much
you
for
very
your
much.
sharing.
Yes, thank you, everyone.
Sorry, Gerald, just before we end, just let me highlight something. There is an investor mailbox, investor@singtel.com. So I noticed there's still a few open questions. So anytime you all wish to ask your questions, please just email us and we'll respond to you as soon as we can.
Okay, so it's just to be clear,
investor@singtel.com.
Okay.
Yeah, I'll put it in the chat group as well, so everyone have it.
Okay.
Okay, thanks so much for actually reaching out and opening this line for us to be able to understand the company's developments and also sharing what is the conduit that we can ask further questions. For those who missed today's sharing, actually the video will be posted on SIAS YouTube channel as well. So if you want to be reviewing some of the comments that were shared or actually be sharing the video with your friends or other partners that may not be able to join tonight's session, do actually go to SIAS YouTube channel where you'll be able to catch this video recording over the next few days. So with that, we'll end tonight's session. Thank you once again, Arthur and representatives of Singtel for sharing the developments with us tonight. And we hope that the investors who have joined us tonight have been able to get a better understanding of the company and what to look out for in the months and years ahead. Thank you.
No, thank you very much, Gerald, and thank you everybody for your time. Good night.
Thank you.
Thank you.